Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's update our view on the gold market. So yesterday we have considered recent pullback that has happened on the background of the inflation report, and as we said, many traders suggest that it might be the real start of the long-term upside trend. It's a continuation to the upside. And indeed, if you'll take a look at the weekly and monthly chart, it seems so, just because on both long-term charts trend stands bullish. On the weekly chart, market has completed 30% pullback and start upward direction, and it seems like the minor retracement after the big pattern that we discussed. So this is some kind of the engulfing, huge engulfing on the weekly chart. At the same time, on the daily chart, trend still stands bearish, and although chances may be not really big that this will happen some kind of the ABCD retracement here, but we should get some more confirmation that market indeed is coming higher, testing of the 2000 level, and maybe keep going higher after that. But on the lower time frame, we said this is relatively safe to consider taking the long position, just because market is coming to the targets that stand slightly above it. And if you take position right here, if even market will turn down after target will be completed, you will get the time and space to protect your position with a break-even stop. This was the major conclusion on the last report that we have made yesterday. Right now on the daily chart, we do not have something really interesting. Market stands for the third session in a range of this CPI rally that we have. While on the 4-hour time frame chart, we've got few grabbers, and these grabbers suggest taking out of this top, which means that indeed next destination point should be somewhere around 1980, and that confirms our idea with the possible taking the position. It's possible market could try to just keep going slightly higher, at least slightly. So maybe it will be even direct upward continuation. We do not know. But for us, the major conclusion here is not with the target, but with the ability to take a position relatively in a safe environment. So with this really small risk, because we have the patterns that suggest taking out the stop, we have the target that stands above this area. So potentially it might be some upward continuation that makes position taking relatively safe. And overall risks here stands not really very significant. Finally, on the hourly chart, you could see the same picture that we discussed recently. So we said, since market already has exceeded all the ABCD extensions right there, we use this recent retracement and its extensions as the target. So first target has been completed right there. So this 127, 1975. Next one stands at 1986, slightly above the 1980. And if you combine everything together, logic suggests that market should keep going higher, because grabbers suggest taking out of this top. But since this top was actually first target and already has been completed, and if market will keep going higher above this, logically it should follow to the next destination point, which is around 1986. So that just confirms the things that we have said, and then we will see what will happen. So because that will be actually the level that should clarify everything for us. So if market will keep going higher, it means it is aiming to move above the previous area, previous tops, back to the 20,000, 2010 area, and so on. If market will stuck here, start flirting something, forming some bearish patterns, I don't know, maybe hand shoulders will be formed or something that's right. It tells us that probably we should get some compounding retracement. So it might be a bit deeper retracement. In the current environment, current situation, chances for that stands not really very significant. It's just because long-term chart stands bullish. And when it stands bullish, if market already turns up, then probably it should follow in this direction. It's very rare it happens that market just shows the deep retracements against the high time frames trends that stands positive. So, but anyway, we will see. For us, the major conclusion that we could make currently, that the chances that market will proceed higher than the 1986 area seems not bad, or at least above this area. and then we will see what on the reaction and then make the decision on our next step.